Sellers advanced for a third straight week, but in pretty choppy fashion, and buyers ended up holding a super key level before bouncing off of Jay Powell's announcement that he was still pretty confident in the economy. So, our buyers positioned well to hold the line now based off the technical hold and the fundamental development, or are sellers going to punch it through? My name is Lamont. I've been a full-time trader for 8 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and our swing report. And in this video, we'll cover that and more. So let us get into it. All right. So as I was saying, buyers held a super key level. So we've been watching this fella here, the structure that's sitting right on top of the July 2024 high. And the July 2024 high is, of course, that key level. So why is it a key level? Well, it was a major resistance for quite some time here. And it's pretty much a monthly breakout, right? So if you just zoom out and you look at the monthly chart, here is that high, and this is obviously the breakout of it. And so whenever you break out over a level, it's very, very common to see a backtest of it. Like, for example, this breakout over this high over here, here's a backtest of it. And if it holds, then these buyers know, okay, we're doing just fine. It's kind of like mountain climbing, right? If you are, on the side of the mountain or whatever, though I don't actually mountain climb, but they drop that like pin thing, this, I don't know, the security hold or whatever. And so if they slip, right, then okay, at least they have these rings that are in place to secure them, right? So it's kind of like making sure that that ring is secure before trying to advance, right? The market is kind of just always trying to climb up. That's actually a pretty good analogy, right? Because it's kind of like the whole stairs up, elevator down situation, right? It's like a mountain climber. The market has to like kind of climb its way up, and then when the sellers come, it's like a goat or something, or a mountain animal. I guess a goat works and like pulls it out or something. Or maybe one of their fellow climbers is a saboteur. He actually doesn't want to go, up the mountain or something. Um, anyway, so that's the idea. And this is actually a notable miss of the level. So you'll notice that they came super close to touching it. 565.16 is that breakout point. And the low is at 565.63. So they missed it by like 50 cents. And back here, it was also quite notable. So here is the low is at 565.17. They missed it by a penny. Here, the back test is 565.27. They missed it by 11 cents. And then again, they missed it after coming super, super close. To me, that's notable. It is kind of exacting in nature. So it's like probably not really, it's probably not big money waiting to play over there. But at the same time, it's an objective that the sellers have that they failed, right? Which is always notable, right? Because you always want to look at the market from the perspective of change and also from the perspective of, what didn't happen, right? What has happened is always helpful as well. They're kind of two sides of the same coin. But, looking at things from the perspective of what hasn't happened, I think is also very valuable. So, um, anyway. Um, so at this point now, what do these buyers need to get done in order to stay constructive? By the way, the fundamental development was just that J Powell basically said, we good. The economy is good as of right now, despite elevated uncertainty. So, I assume he's referencing, how these trade wars are going to shake out or whatever, trade wars two, I guess, Electric Boogaloo. Um, so that is yeah, that's on like the fundamental front. We'll see what the Fed continues to say. I honestly think J Powell's a pretty good chair. He's been very transparent. Like whether or not you agree with his policies, he's been pretty transparent about where the Fed stands and their outlook. So anyway, at this point now, you'll notice that not only did they miss the July 2024 high, but they popped back over the point of control 571.35 of this structure over here. So right now, the absolute two key structures that we need to be monitoring are these guys, right? We care about this guy who's sitting right under the July 2024 high because it's the gateway into all of this demand sitting below. And of course, we care about the guy sitting above the July 2024 high because that's the gateway into all of this, right? And so if we're holding this, that's even better than holding this. This is really the last line in the sand because we don't want to look at levels as if they're like medieval walls or something, right? And as soon as they're breached, the invaders are just going to come pouring in, right? It's more like a semi-porous membrane, right? Where it can get pierced, right? But like a chain link fence or something, right? Like you can get some follow through over it. The chain fence has give and there's holes in it. So like if it was for whatever reason a medieval force up against like a very durable chain link fence, like around like a max prison facility or something, then you know they might get like their spear points through it or their swords through it. They might even like be able to grab through it if they create a little bit of a hole. But if the majority of the fence is okay, the structural integrity is still overall okay, then these forces are still going to be contained on the other side. And then obviously, if you have some kind of opposing force on the other side, like buyers, then maybe they can repel that force, right? Despite there being a little bit of follow through. So that's kind of the idea. Or I guess you could look at it as like a, you know, like a line of like infantrymen, or you know, again going to medieval like times or whatever. Like maybe the first line gets pushed back or whatever, but you have all these people behind you as well who are like kind of supporting you, pushing you forward. So for better or worse. So that's kind of how you want to view these price levels, right? It's kind of like this breakout, right? This breakout is over a key resistance, but there was no follow through, right? And so it's not so much that like as soon as it breaks, everyone just gets pouring in, right? There is the potential that you see breaks with limited follow through. So this is not terribly surprising to see a break with limited follow through because this move is practically straight off the low. So sellers have advanced for 3 weeks in a row and it has been very choppy, but still it's pretty much straight from the low. Very little consolidation, almost no retracement. Like very little retracement here, very little retracement here. So not terribly surprising that buyers would take a stand here. So now at this point, heading into next week, the absolute key level that we care about now is 571.35. If these buyers can continue to find acceptance over 571.35, then this is going to be a very good defensive look for these buyers. Okay, so that is pretty much it. I don't know, did we do a trade? I think we did. Okay, so this was just based off of everything that we were just talking about, right? This is a trade zone from last week, I believe, and it's just based off of this structure and this structure potentially holding, and that's really all that is. So we shall see if that works out. And again, if we find acceptance over 571.35, the potential of this trade zone working would greatly increase. Oops. All right, so moving on to the Qs here. And for the QQQ, oh, I don't have my. For the QQQ here. All right, so this is a bit of a red flag, right? So they are actually through the structure sitting under the July 2024 high. So if you apply that same exact logic to what we were talking about before, we should care primarily about this structure, right? It's still the same case. We still, even right now, we still care primarily about these two structures. This guy over here, and then this guy. I mean, technically, we have a third structure, right? Because the Qs are the weaker, or relatively weaker one. We care about this guy as well. Why this guy? Because these guys are clear, right? We don't have to go over that again. But why this guy? This guy is what dictated the lows of all of this demand over here, right? And so if we are now going to find acceptance back under here, we should expect price action like this. The market now wants to resolve this structure over here. And so when you re-enter a prior area of balance, the market should be trying to evaluate that structure, just like what we were talking about before regarding like those security rings or whatever. I'm sorry, I don't know what they're called. But that's what the market's always trying to do, right? It's always trying to either affirm prior price action or negate it, right? Or create new price action by breaking to new lows or breaking to new highs, like all-time highs or all-time lows. So the market, then the sellers should be trying to take this guy out next, right? Because this guy is what supported this fella, right? And so the market's trying to figure out, all right, what are we doing here, right? Because we've drilled through this guy. We have, I mean, not drilled, but sure, whatever. We've drilled through this guy. We've drilled through this guy, and there's just not we don't know what the next step is, right? It's got to be this fella next. Okay, so how are they going to advance further? It's really very much dependent now on 474.40, right? Because if we take this guy out, then I'm looking back down where there was the next major area of, you know, a solid amount of volume over here. If you just remove these profiles, you can see there's a big chunk of volume over here. So what these buyers would like to get done over here is just, even if they hold in here and then create a lot of volume here and then break out of it, that would be fine too. Like you just don't want to trade through this structure, because think about it, right? If we don't trade through this structure, then what happens? We do this at worst if we don't trade through here, right? And then if you do break out of here, now what do you have? You have a situation like this where you have a high volume node here, a lot of value was created there, and then if you break out of it, that's demand. So That's the super key test now for these buyers. So the key upside references, so again, the downside reference is 474.40. The key upside references are 496.29 and 505.17. That's the point of controls of these two other key structures. Okay. So that is pretty much it. There's a good amount of space for a daily lower high under 513.04. Anything under that will be good for one. And of course, I care about this July 2024 high, of course. And I do still think that if you pop over the July 2024 high, you probably get a pretty decent squeeze here. That should not be big money, right? Big money does not wait to buy at the low. There's a common expression, there's no geniuses at the highs or the lows, right? And you see that because, for example, like, volume always dries up at the tips. Like if you look at contracts traded at major highs and major lows, they will very often taper to very, very, very low numbers. So that's the idea. And you can see this too, like with a volume profile. Like if you were to like zoom into like an intraday chart, and then like if we were to just you know what, we can just do it like this, and then we just look at the profile. All right, you can see that at the lows, there's very little volume. That's just how it has to be, because for a auction to end, people have to stop bidding, right? And the market is always a two-way auction, right? You're bidding up and you're asking down, essentially. So that's pretty much it. That's it. That's really all that we care about for the Qs. Yeah, that's it. So for the rut here, again, I'm not terribly interested in the rut right now. I think it's still a pretty. Did we do trades? I think we got a busted trade zone for the Qs. I want to keep everything above board. I never want to misrepresent. I think we had a busted trade zone, right? Yeah. So we were looking for pretty much the same exact logic for the SPY, but we are looking for that in the Qs, and obviously that was a bust. Is what it is. They're not always going to be winners. Definitely had an opportunity to take your risk out of the equation. I think we spoke about that. At the close of the last week. So ideally, you didn't take any damage, but even if you did take a little bit of damage, 1.48%, that's trading, baby. Like that's, there's a lot of evidence to suggest that risk management is arguably more important than location, than your sequencing abilities. So just make sure that risk management is tight. Like the game is not about never losing. That'd be absurd, right? Think about any kind of profession where you just never have a drawback. That'd be insane, right? So anyway, even like doctors mess up, right? Even SpaceX. Anyway, so let's see here. All right, so I care primarily about this guy, right? This structure back from 2021, right? It's what maintained all the lows throughout this major bounce over here. It's what made these highs over here, made a bunch of highs over here that we made plays off of back in the day. And so here we are again, and it's a little bit unclear, right? So let me just clear out some of these things that we don't really need to pay attention to right now. All right, and I guess we still care about that guy, so I'll leave that up, and we don't care about this guy very much at all, and we'll make an adjustment for this to include all of this, because this is really the local supply that we should care about right now. I'll adjust that later. All right, so for the rut here, this is primarily what we should be paying attention to. Bigger picture, we care about the structure from back in 2021, because holding above it means that we should expect price action like this. In the shorter term, we should care primarily about this supply, right? This daily overhead supply here. Oops. We need to get back over this guy just to negate the change of this pretty significant breakdown here. So you can see I've got this guy marked up over here because this fella, honestly, it's not as important. We should probably mark it up as this big guy over here, only because the market did, drop and pop over it before. So this is where the market's finding some demand right now, but any bounce right now that doesn't get us back over 207.57 with acceptance, I don't really think is very meaningful. That being said, these buyers are positioned well to get pretty squeezy here because you have a bunch of highs that are really close to each other. So you likely have sellers, even on this Friday, you likely have sellers who are selling, here, right, at each day's high, and these are poor location sellers which is, you know, probably why you're seeing this really choppy nature in the market, right? Typically, when you're getting like higher highs that lack follow through or lower lows that lack follow through, it's because you're having late location operators come in, right? And so they are looking to play the momentum and they're looking for more follow through. If they get a little bit of follow through, maybe they chop it up and they hold some of their position and then they leave or stop somewhere, right? This does sound familiar. This is what many day time frame operators will do. Typically in the, you know, in our futures gang or how we do it, we don't usually like to press the issue. You know, we'll start saying, you know, I think there's more meat on the bone on the other side, and then we'll pump the brakes. Doesn't mean you have to go long, right? It just means that I don't really want to be a seller anymore in this late location. So not everyone feels that way though, right? And so they're willing to take a bet. And so you likely have poor location sells here, here, and here. And if you take out the stops and that becomes market buys and it triggers the other stops above here, here, and here, and then what's over here, this is all pretty much one-way trade, right? And so this should be pretty squeezy as well. So it's like a cascading effect. So something to be mindful of for the rut going into next week. Space for a daily lower high under 215.96, and what I primarily care about, the biggest level that I care about, is really 217.60. 217.60 is this point of control of this guy over here, which was such a pitch battle for this level for so long, and it was really off of this level that you get these big rips, right, where you got this major rip up. And again, you can see how they try to defend it. It's a clear drop and pop and drop of it over here before this new leg down. So I think 207.57 is a very reasonable objective. These buyers should be able to get it done with a, you know, very little bit of bounce. But to me, that's not going to mean too much unless they can get back over 217.60. I don't think we did a trade zone for this guy because, oh, right, that makes sense. But that's probably it. I don't think we did anything else. All right, so that's it for the rut here. All right, moving on to the Dow. So the Dow is really still just in responsive trade territory as well, wherein, you know, we are back to testing this major structure. So if you'll recall, we set up this trade zone way back here, right? And it was just based off of this new demand zone that was created. The market affirmed that demand zone, right? Obviously, we were helped out by the election reaction, and then it comes here and it helps us again, right? This structure over here helps us again, and now lo and behold, here we are for a third time, and these buyers are again finding some bid support here. Again, no surprise, right? Because this is just balancing, and whenever the market is balancing, you just want to determine, okay, well, what are the key structures, right? What are the key structures that is maintaining this balance, just like in the rut, right? Just like for the rut, we were, oops, over here, just like in the rut, we were looking at this guy, right? Because this guy is what did all of this. So it's the same idea, right? If these buyers can continue to just hold over this and under this, then we're just looking at further balance. So I maintain that this is a very reasonable trade zone to continue using. And if you did it, then you probably want to be looking for a potential exit here for 33.67. Take your risk out of the equation. If that's your thing, if you front load your risk and that's your approach. If you're more of an adder, I think it's reasonable to be trying to add up to, all the way up to here, but just realize that there's no guarantees. That experience, well, whatever, we'll get into that in a second. That's probably what I'll talk about for trade review. So that's really it, right? So what do we care about next week? I honestly don't even care about 426.45 that much. I think 421.08 is still what I care about the most. The market has already affirmed this structure so many times. There's a good amount of volume traded here. It's a notable miss that the market hasn't come down to touch down on it. And so I still care primarily about this structure, this guy over here. All right, so as long as we're holding over 421.08, the odds of us doing this further balance are good. But of course, now we have this supply to contend with and this supply to contend with. This is honestly so interesting. Like I don't think I've ever seen that. One, like an outside bar, another outside bar. I mean, they're not perfect, but like that's just a wild megaphone. Like wild expanding range, whatever you want to call it. And check it out, right? On like the lower time frame. It's like really wild. Anyway, so like normally EQs happen like that. Like normally balance, right? Balance typically gets tighter, you know, it doesn't usually expand. So anyway, what are we talking about here? That's it. That's really moving on to the dollar here. So the dollar, what? Oh, this was during the stream. This is not the old trade zone is now a bust, right? Well, I mean, technically it did work already. Came into our zone, bounced out of it. Came into our zone, a little bit of a bounce, just a dead cat bounce for a lower high. So this guy is a bust now. Again, no biggie. Especially if you were in from this guy. So now at this point, remember why we had that trade zone here, right? It was because there was the potential that these dollar buyers could hold a back test over this guy, and holding a back test over this guy would be a really great look. It would put this back into play. 109.365. You can see that's exactly where there was a battle next. I mean, you literally paused right at 109.365 initially after breaking out of that key supply. So at this point now, I think this is reasonable. And this is the same exact logic as this. This is the same exact logic, right? Because we're back under this key structure, just like we were talking about before, and like we've talked about on this program many times. Responsive trade is all about finding where the key structures are and then taking your plays based off of those key structures. Again, just like this. So at this point now, there's so much space for a lower high under 107.595 that if you're a seller in the dollar, this is a very, very reasonable location for that. Maybe give it a little bit of wiggle room here, but something like that, I think very reasonable. It's the exact opposite of this. Exact opposite of this play, okay? So that's really it for the dollar. NVDA, so NVDA, this zone finally busted, right? Came into here, works, comes into here, works again, and third time is not the charm. So that being said, I still want it down here. Like I still prefer down here, right? Like I think that there's the potential. Like if you look at the Fangman T stocks right now, we'll come right back to this. But if you just look at the Fangman T stocks right now, particularly with I think Microsoft was the first one that started it. This is it's just been doing this, right? It's been trading sideways for a really long time. And if you yeah, so if you zoom out, right, then as of right now, it is still holding even just over this guy. And as long as we're holding over this fella, right, this guy, the the November 2021 high, then all of this sideways trade is still being affirmed. So I would not be surprised if this is a major top here, but even if this is a major top, if we don't take out this high volume area, I think we're doing just fine. But my point is just that I think it's that there's the potential that that NVDA is going to do something kind of similar, right? Where it's just a very lengthy amount of sideways trade. And if it's going to do that, well, then we should be primarily caring about this guy because Microsoft's equivalent structure is pretty much this, So we're getting close. We're getting close to, well, technically we've already tested the highs. So I would not be surprised if NVDA makes their, and they're more correlated, right? Microsoft, NVDA, they're more similar. Like regarding all the other Fangman T, NVDA is their business, right, is more aligned with Microsoft than it is with like Apple or Meta or Netflix or Google or Amazon. Honestly, it's really Microsoft is primarily their, at least in Fangman T, it's like their closest peer. So I would not be surprised if they're doing something similar right now, and I would love it to start reaccumulating here. I didn't do any buying in throughout any of this, right? I have a lot of NVDA from dirt cheap, and so I'm not really in a huge rush to reinitiate. So, and I don't like to distract myself with like short-term trades. When I have like a really large, longer-term position in an asset, I don't really like to distract myself with short-term trades. I prefer to sell credit around it, and that's been fine, right? Selling credit in this kind of balance is perfect, even if you don't do a good job, right? Because you're trading sideways so long, the market gives you opportunity to keep rolling those strikes up and out by just putting more time on it. So that is pretty much it. I would prefer it down here still. So I don't care to do like I'm not going to put a lot of confidence in it right now because we're not even close, but something along these lines is really what I would prefer for NVDA. And I don't think it's been daily oversold in a very, very long time. And surely it would be daily oversold. So something like this to add to the position, take the risk out, etc. I think is very reasonable. It's not been daily oversold yet in so long. So it would be daily oversold if we made our way down here. So if we bounce a little bit, cool off the RSI, and then get down there again, I think that would be a pretty tasty setup. Okay, moving on to Bitcoin. So for Bitcoin, all right, so remember what we were talking about with Bitcoin, right? Like if we were to break down, then what we would if we were to break down, the objective for the sellers would be to get back over here, 73835.57, to try to negate this breakout, right? And we discussed that if there was going to be any kind of pause on the way down, it should be where there's some overlap, right? There's like 3 or 4 days of overlap here, 2 days of overlap here. It would stand to reason that these buyers would be interested, if they were going to be interested at all, in defending where there was a little bit of value established there. And so this is very notable to me because the sellers, while they did exactly what they had to get done, right? Where's our trade zone? The sellers did exactly what they had to get done despite the news pump. Whoever, I don't know if it was Trump or whatever, talking about a reserve, a U.S. reserve, whatever, using Bitcoin. It's wild. What's happened with Bitcoin, right? It's supposed to be like a anti-government move away from the dollar thing, but anyway, all right, so yeah, so the sellers did what they had to get done, right? Defended this key area of supply, but at the same time, they're not advancing so well. So like I was saying, I wouldn't be surprised if we were to see a lot of balance now over this guy and under this guy. And so you'll recall that when we had this situation over here, we were watching this fellow over here to see if the market would pause there. And you do, right? You do have stalling here. You do have stalling here. Eventually, they do make it through. But the idea is very similar to what we have going on over here. So our major reference, our big kahuna, is this guy. And then on the way down, we had smaller references, this overlap area and this overlap area. And you'll see that the sellers so far failed to get down to this like a little bit slightly larger, right? 4-day balance. And instead got stalled over here where there's like next to no volume. So that's honestly a pretty notable defense from these buyers here. And then you'll see that this higher low was set pretty much right off of the high of this little balance here, excuse me. So, it's anyone's game right now, right? Because the sellers have major supply, the buyers have major demand. Bigger picture, this is still fine, right? You zoom out and it's like just looking for a monthly higher low. Not only are you just looking for a monthly higher low over 49050.01, but also, again, this breakout's not yet been negated unless under 73835.57. So that is really all that I care about. If you use this trade zone, ideally you took some exits here or, on this, when you notice this failure, no later than here. On the return trip, I think it would have been pretty reasonable to chop it up. And that would have been a pretty decent gain, even if you just did this blindly and your average is here, that's still a 10% gain. So I would, chop that up. And even right now, you could chop that up. This is Saturday morning right now, but hopefully things don't change too much by Sunday morning. But even right now, you have the ability to chop it up, right? So you can take your risk out of the equation, throw your stop over the local high, see if the sellers will follow through. And that's really it. Okay, so the key levels heading into the next week and into the near term, 89541.25, buyers can acceptance back over this guy to resume all of this kind of balance. And the key downside reference is, of course, 73835.57. All right, that's just this guy. All right. Okay, moving on to Ethereum here. So Ethereum, this is really do or die time here, right? Ethereum is just doing this major balance over here. You can see how this structure has been supportive so many times here, half a dozen times or so. And so again, we find ourselves grinding this structure. And so it's really all about acceptance over here. I think our trade zone was designed around this guy, right? Yeah. It's like, I know it looks wild, right? But that's what the buyer should try to get done. Will they get it done? We never get to know. We can only decide, what is the best circumstances, make our decisions, and then hope for the best. It's like anything else in life. There is really no such thing as confirmation. There's no guarantees, right? It does, like, contracts get breached, divorces happen, blood brothers, is that what you call it, when you cut yourself and blood brothers betray each other? Turns out, mixing your blood with somebody, actually not terribly strong bond. It's just a questionable health decision, really. Okay, so that is pretty much it for Ethereum. It's really do or die time. This is the gateway into all of this demand. And so if you do find acceptance under here, then we should expect price action like this again, which, is problematic. Honestly, not making a new high here is starting to feel like Ethereum it's kind of giving me Litecoin vibes, like Litecoin. just kind of never made new highs. It's never been, never really, it's just been trading sideways for a super long time, right? So that's my opinion. At least it seems like Sol is taking market share from Ethereum. Um, you know, we'll see. Okay, so that's pretty much it. Oh, for URA. And then finally for URA, also in this super key spot, it's put up or shut up time for URA. And so yeah, so this is the key demand zone. 23.13 is going to be that super key level here. On the way up to this eventual target is 27.34. I care about this guy because the market affirmed it, so many times, right? Breaks out over it. First of all, it rejects from it. Then it holds a bunch of backtest over it. You can see very clear rejections off of it. So, your first targeting, if you're doing something like this, should be here. And then your next targeting should be the other side of the range. But this is a very similar situation to Ethereum. Like, they're not correlated at all, but it's a very, very similar situation to uranium. And, I'm not really sure, like, fundamentally, all of this turmoil, how it's affecting the space. I got to talk to Red, I guess, about it. But anyway, that's pretty much it for uranium. For trade review this week, I just have this, I've not really been doing so much. I mean, we did get a really sick swing report play, but it's still, live. So I don't really want to talk about it right now. But so, and in general, like swing trading, just with the choppy nature of the market, it's just harder, So the day time frame stuff I think is a little bit easier. You can control your risk a little bit better. That being said, I don't think that I made the best decisions for how I did this particular trade. So I just want to talk about it, review it, and then use it to refine the process. That's how this all works, right? So quick and dirty. I don't really I don't have the comments because I don't think it's really that meaningful. Why would I lie about a not great trade? I mean, it was okay. Okay, so the trade that I think I did not so great was there are some good. Oh, there's always some good. There's always some bad, right? So for the good, it is the location, right? I think the idea of the trade made a lot of sense. I think the execution of it less so. So as you guys know, I've been working on adding to trades instead of front loading the risk and then taking the risk off as it works. I wanted to start with less amount of risk and then add more as the trade continues to work. And I'm still kind of like debating whether or not like how to approach the context of it all, because the thing for me is the way that I observe it, and this is like observing Tom Holgard, the author of Best Losers Win. As long as he's really confident about it, I guess the trend is also really important, right? Not just confidence, but trend. But like trend is also relative, So for me, I was thinking, all right, my thinking process was, okay, we've been balancing, right? And so where are we balancing? We are currently balancing, we were on this session at least, balancing under this guy and over this guy, and the market affirmed this guy on this day, and we were currently set to open up right above it. So I figured, okay, if we test this fella again, and knowing that the daily chart is over here, this day is on the March 6th. March 6th is over here, right? And so what happened in the prior sessions was that we held the low of this structure here. So I'm thinking there's the potential that we continue to balance in here. So I'm thinking we can continue to balance within yesterday's session, and there's the potential that we balance within here, and then potentially come and take this. I was really eyeing this, right? Like thinking, okay, if we do crack this, then that should get us going. And so I was using not only playing off of the levels again that's over here, not only playing off of this structure, right? So I can actually use this chart. That should be fine. Oops. Not only playing off of this guy, right, on this session, right? So I buy this pass back over, and I was looking to add all the way up to here, right? And so, you know what? I probably should have, because I kind of forgot to trade a little bit, but I did get the one ad, and then ended up stopping out the ad. So the ad was a chop and stop because I think I added it off of this pass back over the point of control, playing to try to get to here and trying to get to here, stop out, chop up the ad, stop it out, and then stop out the original position for some tacos overall. So it was really nothing trade. But I think in this situation, like I'm thinking, okay, we can probably trend on the 5 minute time frame up to the supply at the high of the day. But I think what it would make more sense if I'm playing with like if the whole session is likely to be a trend day, which that was unlikely because we were still at an inside bar and we opened at the lows of the range. So for me, I think this was a bit of an error using the wrong tactic here. Um, I've just kind of like been so focused on adding to the trades that I this is like honestly a common mistake of mine, like a frequent mistake of mine where I just get really myopic, I guess, so focused on my objective that I kind of lose sight of other stuff. And this is again, this is very similar to another frequent error that I make, which is like just watching my work, right? Knowing that I want to get a pair trade on, and then getting one side of the pair trade on, and then just focusing on that one side and forgetting to do the opposite trade. So something I'm working on, and for me, I like to attack these things with or address these things with just visualization practices. So I'll just relive this scenario in my mind like every day, well, until I have a new thing to work on. um every day I'll like relive this experience in my mind and then just do it differently. And that helps to recondition yourself to start doing things differently, because if you wait for the market, like every time you're doing trades to make these adjustments, then the reps will be kind of further and fewer between. So, I highly recommend it. I suggest it. It's very helpful for me. It's honestly been way more helpful in my personal life than the trading. Like I don't really care. At this point, I don't really care about like the like at this point it's really like icing on the cake for when it comes to trading efficiency or whatever. But I mean, I shouldn't say that, right? You never know, things can go bad. But I I have stop gaps in place, so it should be no problem. But my personal life, I find that this has been just so incredibly helpful because everybody has like blind blind spots, right? Everybody has shortcomings or whatever. And if you're a decent person, right, then the odds of you being negatively affected by those maladaptive behaviors or thoughts very regularly is probably pretty low, right? Like if you go through your life and you're pretty well adjusted, you don't really have that much friction or whatever, then everything is probably pretty chill for you, most of the time. Um, and then every now and then you have a situation where you don't respond to it well, right? And so those are rare. And if those situations are rare, then you don't really get a lot of opportunity to practice being better in that kind of situation, you know? So what can you do? You can just visualize it, because your brain, it really has no idea. It has no idea what's real or fake. You don't even know that I'm real. You're not sure. You can't really be sure that I'm real. For all you know, I'm a figment of your imagination, and you're just in you know, a padded walled room, right? So, somewhere, for all you know. So anyway, that's all I got. That's pretty much it. I think that was the most important thing for me last week, the most memorable uh, part of any kind of trading session. So that's it. I appreciate you tuning in. If you made it all the way to the end of this video, if you wouldn't mind hitting us with a like or subscribe, we would appreciate that very much. Lets us know to creating content like this and costs you nothing. Otherwise, if you are interested in joining community of traders and engaging in this kind of discourse very regularly or every day if you want, then consider joining our community. Links in the description below. If you're interested in this room report, which is just 2 novel ideas sent to your inbox every week, then and live updates for any trades that I do take, an update from Dan as well, then check it out. Links in the description below. Otherwise, appreciate y'all tuning in. Thanks for sharing some of your time and energy with me, and I hope to see y'all next time. Farewell.